Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're talking European and UK mid-caps, and my guest is Joachim Klement, Head of Strategy at Liberum Capital. With their domestic focus, it's no surprise that mid-cap stocks have been struggling. In the UK earlier this year, mid-caps saw some of their longest losing streaks since the height of the COVID-induced sell-off in 2020, as a weak currency and spiralling inflation and interest rates fed into fears of deep recession. Like their European counterparts, they're down around 18% year to date, though. Consider also that both indices are up around 13 to 14% on the quarter to date. That as investors react to positive data and the hope that perhaps central banks may not continue hiking rates as aggressively as feared. So could this be a moment to think about jumping in? If so, ETFs like the iShares Stocks Europe Mid 200 provide an easy vehicle. Like the mid-cap indices, it's down year to date but showing strong gains on the quarter. It has a market cap of around €500 million and a wide base of constituent holdings across sectors. Well, joining me now for his take on those themes is Joachim Klement, Head of Strategy at Liberum Capital. Joachim, thank you so much for joining us today. Before we look at whether mid-caps are actually going through a turning point at the moment, let's just look back at the last few years and why mid-caps have underperformed and to what extent they've underperformed.
Yeah, it's been a bit of a roller coaster for mid-caps. 2021 was an excellent year for mid-caps versus large caps, mostly because of the recovery after the pandemic. But if we look a little bit further back in time, particularly including the pandemic years, when literally the only stocks that did have a positive performance were global tech stocks that weren't as affected by the pandemic. And that was a very, very tough time, particularly for the more cyclical sectors, whether it's industrials or retail.
Let's look at UK mid-caps. They, of course, have not benefited in the same way as their larger peers from the post-Brexit slump in sterling. So what is the outlook there?
Well, a lot of UK mid-caps are domestically oriented companies that earn and generate revenues in sterling, but have a lot of costs in dollars. For energy, but also for imported goods. And that meant that their margins have been squeezed dramatically by both a stronger dollar and the higher inflation rates and the higher cost increases. As we move into 2023, we think that those cost pressures are easing off and the dollar has already started to weaken versus sterling, both of which should be really positive for UK mid-caps, particularly those that earn domestically in the UK.
Well, European mid-caps saw a massive dip during the pandemic, but are actually up by around 45% since then. So what is their outlook, do you think?
A lot of these companies now trade at very, very attractive valuations. Even if we assume that earnings would decline by 25%, which is kind of what we expect for next year if we go into recession, even then, the valuations for mid-caps in the UK as well as in Europe would still be cheaper than 10-year averages. So a lot has been discounted already.
So is this a good moment to jump in, do you think?
We'll still have to wait for the turn in interest rates and in the rate hike cycle. But there are clearly sectors that we prefer that are incredibly attractively valued. Just think of online retailers, whether we're talking about Superdry in the UK, for example, or media platforms like Scout24 or Rightmove and Money Supermarket in the UK. All of these stocks trade at extremely low multiples after having been punished by the rising interest rates. And they're poised to actually outperform once interest rates start to decline again.
So retail possibly attractive. What other sectors do you like?
Our most preferred sector for 2023, especially in the mid-cap and small-cap area, is technology and any kind of early cyclical sector. We're talking here mostly about software, whether we're talking about companies like Bytes Technology, in general software and media platforms that should do well and be the first to rise, followed by consumer discretionary.
And in the UK, I know that you've identified leisure as something that is underperforming at the moment. Tell us about that.
As inflationary pressures decline and sterling relatively weak sterling prevents us from moving abroad for our vacations, well, guess what? UK leisure, and in particular pub companies, are amongst the most attractive investments because they should benefit from staycations.
And what about those sectors that might carry a bit of a health warning on them? What are those at the moment?
Ironically, the sector that did the best in 2022, namely the energy sector, is to me most at risk of underperforming next year. I just looked up the earnings growth expectations, and in Europe, analysts still expect some 7% positive earnings growth, in the UK even 50%, while we expect earnings for oil companies to drop by about 30% over the next 12 months.
Okay, well, we'll leave it there. Joachim Klement, Head of Strategy at Liberum Capital. Thank you for your insights and thank you for joining us today. And that is your roundup of European and UK mid-caps. I'm David Pollard and this is Reuters.